What's up, traders? Welcome back to the Modern Day Trader. Today, I'm going to be doing something a little bit different. And honestly, I think it's something that's long overdue. I want to bring in something from which I've learned this week, which is something got to do with macroeconomics and how you actually use macroeconomics to influence your trading and to also sit on your hands when you need to. This week I'm gonna do a mini run through of the week, just a quick run through, and then I'm gonna bring in one of the sections that I've actually learned this past week and what it means and how you actually use this information to have an added confluence on top of your plan, right? Uh, anyway, looking at pound yen this week, what you can see is that coming into the week, we were relatively bullish when we pushed up into these highs Thursday night, and then you can see on Friday last week we had the impulse push to the downside, shifting structure back bearish, and at this given time you just anticipating that price action is potentially going to either go into this range or potentially fall to the downside. Now, we all knew coming into this past week that at some point Donald Trump is going to give a speech on the tariff war or these tariffs that's going on. And one of the things that I've learned, amongst others, such as GDP, CPI, or inflation, interest rates, etc., the thing that I think is major, or the key concept that I think is major to speak on this week, is called risk sentiment. Now, risk sentiment essentially is considering geopolitical factors, geopolitical tensions, global economic fear, etc., right? So essentially what it is that when the markets are risk on, people pile into pound yen and bonds or stocks, sorry, not bonds. When fear kicks in, investors runs to safety, which is your Japanese yen and bonds, right? So essentially what happens is that you have something when you're weighing out risk sentiment, you are either risk on, meaning that investors are more prone to go into more riskier investments such as GBPJPY or stocks, etc. When you risk off, there's a lot of tension in the world, and essentially investors are going to run to a bit more of a safer investment. And as you guys know, Japanese yen is actually a safe haven, so people will tend to run to Japanese yen, things like bonds and or gold, right? So with all of this taking place, the tariff wars, more whatever else geopolitical tensions there are, global economic fears, these are risk-off events that will potentially crush GBP JPY. And that's why you can see right after Wednesday, when Donald Trump had that conversation on the tariffs, uh, you can see that essentially what happened is that, in hindsight, now looking back after we had this impulsive push to the downside, essentially the global mood that we needed to factor in after that was uh, pretty much unsure. Like, they don't know where they stand. It's really bad, and so investors are trying to find safety, and because they're trying to find safety and have their money moving to safer markets, now you have stocks going down, your GBP JPY going down. Why? Because essentially the yen is now going up, and since the yen is going up, gold will be going up, bonds will be going up, because those are the safer options for investors to go invest into. And these are the things that you need to take into account when you are trading. You need to ask yourself, what is the risk sentiment in the market today, or what is the risk sentiment throughout this next quarter? What do I think it is? And you can obviously base it off from multiple things that are happening. Donald Trump. I feel like any trader knows that Donald Trump, even in his prior time in the office, his tweets alone made a big movement or create these big movements in the market. So it's not necessarily that you have to be listening to the news per se. It's just that you have to stay up to date with what is actually happening in the economies and in the biggest economy in the world that will affect your particular pair, because you need to always factor in the global mood. The global mood will essentially determine whether you are risk on or risk off. And these are the things that you need to be listening to. You need to be understanding, because then you'd understand that, listen, if I'm risk on, I understand that my pay, for instance, in this example, GBPJPY, if I am risk on, I understand that now I'm more bullish than ever. And price action is probably more likely than going to push bullish than it is to be pushing bearish. So when I do get price action pulling back into a point of interest to potentially buy in a risk on situation, let me go in. Let me actually either scale in positions. Let me try and capitalize on this movement to the upside. In risk off situations, you need to understand is not that you are risking less or anything. You just need to understand that the chances of price action pushing bearish is high, especially if you trade in a pair like GBPJPY, because obviously the back end of the pair is JPY, which is a safe haven where people run to, as I mentioned, for safety of investment. And when people do that, you will find that yen will now skyrocket, and because the yen is rocketing, there's a high likely chance that GBPJPY will start to tumble, right? And when there's just a neutral feeling in the market, that's more likely than not where price action will start to range or go into a consolidation, accumulation, distribution, whatever you want to call it. But that's more likely than not where price action will go into a range bound market, and you will start to see that price action is actually moving sideways, which is harder to trade. And that's just more so because there is no particular uh fundamental fact as to why price action actually needs to move up or down. There's no fundamental basis as to why one currency or one economy is better than the other. Until further notice, you then have to either sit on your hands or trade your plan accordingly for a range bound market. And that is essentially risk sentiment, and how you can incorporate risk sentiment into your trading. And my thought before this was always that when you risk on, you essentially taking on more risk, and on when you risk off, essentially you're risking a little bit less. So yeah, that's the way it actually works. It just means it just speaks to what investors are actually doing. It speaks to what is going to actually happen, or where the money is moving from and where it's moving to, and then where it's moving to and from. You know what I mean? So that is essentially what I've learned in the past week. I've also learned about GDP and how if GDP increases, the likelihood of an economy expansion is higher. And because the likelihood of an expansion happens, the likelihood of interest rate hikes are higher too. And because interest rate hikes are higher, uh, uh, you have a higher chance of external investors now wanting to invest into that economy. And because there's a higher interest rate yield for those investors, the economy will now start to get stable, become better, and that economy becomes stronger. So then you have a higher chance of that particular economy being bullish, right? And those are the things that you need to look at when you're trying to put things together. When you're trying to use fundamental or fundamental fact to skew or add to your favor when you place in the trade. Then we also have inflation. Now, inflation is essentially how fast price rises. Uh, and there's really just two factors or two measures that we take into account. This is consumer price index, which is your CPI, and then you have producer price index, which is PPI. Now, the first one tracks retail levels of prices, and the second one tracks wholesale prices just in general. And once you start to put all these together, you understand that they all have a interlinked or an intertwined ability to affect each other and affect an economy that you are actually looking at. And because they affect that economy, there's a chance that you can find the underlying reasons or the fundamental reasons as to why price action is moving the way it is. And then thereafter you start to add your patterns, you start to add your technical strategy, and you trade with a bit more confidence, knowing that price action is more likely than not going to move up. So now you have the fundamental basis. You can also find the time and price factor, and then after that you can start taking advantage of what you look for on a technical basis, right? So something that I didn't look into this past week, and I will give you guys a bit of a deeper breakdown on GDP, inflation, interest rates, employment data, and then trade balances too. This one was more so to speak about risk sentiment, just for you guys to understand risk on and risk off scenarios. Uh, but I want to look into my next goal for this pivot is to essentially look into monetary policies and take advantage of the time that I have and understand these concepts before the end of April. And the reason why I want to understand monetary policy is because I think my version or the thing that I have, the outlook that I have on monetary policies right now is that it gives the layout of what's going to happen with the money. I don't know if I am completely right. I could be completely wrong, completely wrong. But anyway, guys, I think this video pretty much marks the first video in my pivot to a bit of a, I'd say, a fundamental based trading system. I don't necessarily want to say macro backed, just because I think there is going to be multiple things besides macroeconomics that is going to back me, but it's still fundamental. And what I mean by fundamental is anything that drives price other than technicals. Anything that drives price other than technicals. It could be psychology, because that's a so big point of what drives price. And so yeah, I just wanted to let you guys know that this is the first video in my pivot to fundamental trading. If you did find any value in this breakdown, please drop a like and subscribe to follow the journey. Next week, I think I'll dive a bit deeper into monetary policies, central banks, and then interest rate policy shifts too. So let me know in the comments if you trade with fundamentals and what pairs you look at. What is the fundamental key concepts that you actually look at? Do you look at, because the things that I also want to look at is commitment of traders report. I want to be looking at, as I mentioned, the monetary policies, and just getting to know these things and understanding how they will actually impact my trading in a long-term perspective. So with that being said, guys, I will catch you on the next video. Don't forget to stay disciplined and stay consistent. And from your boy Marcy at the Modern Day Trader, please have a lovely, profitable week. Peace out.